rallied last Wednesday as the results of the US presidential elections showed a possible clear win of Donald Trump. Even the Fed's slightly more hawkish interest rate decision did not reverse the upward direction of major US stock market indexes on Thursday. Today, we are to have a closer look at the Fed's interest rate decision, discuss the release of the US CPI rates for October later today, and have a look also on the upcoming earnings reports of NVIDIA. For a rounder view, we are to conclude the report with a technical analysis of S&P 500's daily chart. Last week, the Fed cut rates as expected by 25 basis points, yet may have been more hawkish than were expected in its forward guidance. Furthermore, we highlight that the bank seems determined to defend its independence from the newly elected US president, as the chairman clearly stated that he would not resign if asked for by Donald Trump. Overall, we note that despite the market expectations for the Fed to proceed with another rate cut in the December meeting easing, they are still predominant and may provide support on US stock markets on a monetary level should they ease further. Yet on Friday, Fed Chairman Powell is expected to speak, while other Fed policymakers are also scheduled to speak throughout the next 7 days. And should the signal for an easing of the Fed's rate-cutting path be enhanced, we may see the market being forced to reposition itself by readjusting its expectations, thus weighing on US stock markets. Today we had the release of the US October CPI rates as the next big test for the US stock markets. The headline rate is expected to accelerate to 2.6% year-on-year compared to September's 2.4% year-on-year, while on a core level the rate is expected to remain unchanged at 3.3% year-on-year overall. Should the rates show a relative resilience of inflationary pressures in the US economy, we may see market expectations easing for another rate cut by the Fed in December, in turn more or less weighing on US stock markets. As for earnings reports, we turn our attention to the mega market cap high-tech company NVIDIA, which is to release its earnings report next Wednesday. The EPS figure is expected to rise to 0.74 from past 0.68. While also revenues for the past quarter are expected to be increased, reaching $32.97 billion if compared to last quarter's $30 billion. Overall expectations seem to be improving the company's economic outlook, and if realized as surpass forecasts, we may see the company's share price getting some support. On a deeper fundamental level, the recent crypto frenzy after Donald Trump's re-election may provide tailwinds for the company's revenue, while in Japan, NVIDIA and SoftBank Corporation seem to be accelerating the country's path towards becoming a global AI powerhouse, both issues being supportive for the company's share price. S&P 500's movement over the past week forces to recalibrate its resistance lines as the broad US Equities index hit a new record high at the 6,030 resistance level on Monday. Since then, the index's price action tended to correct lower, yet the bullish tendencies seem to continue to be present as the RSI indicator, correcting below the reading of 70, remains close by. Furthermore, the upward trend line guiding the index since the 5th of August remains intact, also implying a continuance of the bullish outlook despite a possible correction lower. It should be noted that the price action corrected lower after flirting with the upper Bollinger Band, yet since the latest peak, the distance between the price action and the upper Bollinger Band has widened a bit, allowing for some room for the bulls to play. Should the bulls regain control over the index's direction, we may see S&P 500 breaking the 6,030 resistance line, and we set as the next possible target for the bulls the 6,250 resistance level. Yet, should the correction lower be extended, the foundations for a possible bearish outlook could be set. Yet for a bearish outlook, for the time being, seems remote, and for it to be adopted, we would require the index's price action to drop, breaking the 5,890 support line, continue to break the pre-mentioned upward trend line in the first signal of an interruption of the upward movement, and move even lower by breaking the 5,675 support base. We hope that you found this report useful, and from all of us here at FX, best wishes for solid trading.